This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus is set to raise its oil output goal by 100,000 barrels per day, an amount analysts said was a setback to U.S. President Joe Biden after his trip to Saudi Arabia to ask the producer group's leader to pump more to help the United States and the global economy. The increase, equivalent to 0.1% of global demand, follows weeks of speculation that Biden's trip to the Middle East and Washington's clearance of missile defense system sales to Riyadh and the United Arab Emirates will bring more oil to the world market. That is so little as to be meaningless. From a physical standpoint, it is a marginal blip. As a political gesture, it is almost insulting, said Rod Al-Qadiri, Managing Director for Energy, Climate, and Sustainability at Eurasia Group.
U.S. crude oil inventories rose unexpectedly last week as exports fell and refiners lowered their runs, while gasoline stocks also posted a surprise build as demand slowed, the Energy Information Administration said on Wednesday. Crude inventories rose by 4.5 million barrels in the week to July 29 to 426.6 million barrels, the AIA said, compared with analysts' expectations in a Reuters poll for a 600,000 barrel drop. Crude stocks at the Cushing, Oklahoma, delivery hub for U.S. futures rose by 926,000 barrels in the week, the AIA said. Refinery crude runs fell by 174,000 barrels per day, and refinery utilization rates dropped by 1.2 percentage points to 91% of total capacity.
Moving on to the top news in the energy sector.
The West's energy giants are set to return a record $30 billion to investors after reporting bumper profits in the second quarter of the year following a surge in energy prices. But the top 5 Western oil and gas companies have shied away from investing more of the combined record profits of nearly $60 billion in new production as they weigh the impact of recession and climate change on future fossil fuel demand. The reluctance to spend may exacerbate an energy supply crunch that has driven inflation to multi-decade highs and ignited calls from consumers and opposition leaders for governments to increase tax on energy companies.
The German government will have to amend its energy security law again in September as its gas levy cannot yet be imposed on all consumers, including those with fixed prices contracts, government and parliamentary sources told Reuters on Wednesday. A gas levy, which had been set to come into force from October, was envisaged as a tool to collect funds from all gas consumers to support ailing gas importers that are struggling with soaring prices due to falling Russian gas export flows. Industry sources told Reuters that around 1/4 of gas consumer contracts have clauses that would guarantee fixed prices, which would make adding on a levy difficult. Next, we have the top news in metal markets. A group of Chinese companies are investigating why a commodities storage site in China's northern city Qinhuangdao is holding only 1/3 of the copper concentrate they were financing, Bloomberg reported on Thursday. Traders from more than a dozen state-owned firms gathered in Qinhuangdao earlier this week after becoming aware of the missing material following concerns about the borrower's finances, the report said, citing people familiar with the matter. According to Bloomberg, the group has a claim on 300,000 tons of concentrate worth 5 billion yuan, $740 million, but at present there's only 100,000 tons at the depot, which pegs the dollar value of the missing material at about $490 million.
Gold prices climbed over 1% to hit a fresh one-month peak on Thursday, underpinned by a retreat in the dollar and U.S. Treasury yields, and as investors kept a close tab on U.S. China tensions. Spot gold was up 1.1% to $1,784.70 per ounce at 10:47 a.m. Eastern Daylight Saving Time, 14:47 GMT, having risen to its highest since July 5 earlier. U.S. gold futures jumped 1.5% to $1,803.50 per ounce. As of late, yields are coming down slightly. That has been, along with the dollar's recent weakness, one of the key benefits to gold, said David Megger, director of metals trading at High Ridge Futures.
We will now look at the top news in the agricultural sector.
Malaysia said on Thursday it was ready to help India meet its palm oil demand in view of potentially erratic supply from top supplier Indonesia. India is expected to see a surge in demand to around 800,000 tons per month for the next 6 months, Malaysia's Plantation Industries and Commodities Minister Zuraida Kamarudin said in a statement, citing data from the Indian Vegetable Oil Producers Association.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.